Hey everybody, welcome back to the channel. If you've been wondering whether in today's market it's better to keep renting or bite the bullet and buy a home, then today's video is for you. I'm Joe Nelson of the Nelson Home Group, Kansas City's highest rated real estate team on Google. Obviously, as a realtor and property investor myself, I would always advise buying over renting for the long-term gain, but today I'm going to try to remove my realtor bias and share real pros and cons of each. Stick around till the end because I'm going to break down the cost of waiting to buy later if you're still on the fence. So let's get into it. Probably the most common reason you've heard to buy instead of rent is that by renting, you're paying your landlord's mortgage. It's conventional wisdom for a reason. When you purchase a home, your mortgage payments build equity, contributing to your overall wealth and storing up for your future. When you own your home, you also own the value it appreciates over time, exponentially increasing your wealth over the price paid for the home. Should you choose to sell, that becomes cash in your pocket. On the flip side, investors often offer lease terms that at minimum pay the payments for their mortgage, leaving you to pay a mortgage payment that builds wealth for somebody else. That said, included in that rent payment though, landlords and property managers will usually cover things like lawn care, maintenance, and other repairs. If, say, your air conditioner goes out in the middle of summer, it's your landlord who will have to have the task of finding and paying someone to fix or replace it, a repair that could cost thousands of dollars that you won't have to worry about. So buying a home builds personal wealth, but day-to-day maintenance and upkeep are at your own cost, while renting builds wealth for your landlord, but at the convenience of someone else handling repairs and maintenance. The next thing to consider is whether you're looking for long-term stability or something more flexible. With a fixed rate mortgage, you never have to worry about your principal and interest payment rising year after year. You're able to make plans and budgets further into the future. You also have the freedom to customize and renovate your home as you want, since not only is it yours, but you'll be living there long enough to reap the benefits of your hard work. Renting, on the other hand, provides a lot more flexibility. Lease terms can be set for anywhere from a few months to a year or two. If you aren't looking to stay where you are long term, this gives you the ability to pick up and move without having to worry about selling your home or a mortgage payment following you. It's a great option if you have a job that requires you to relocate frequently. However, this begs the risk of rent increasing at the end of your lease term, and if you aren't able to keep up with that cost, having to find new housing. I have had clients rent seeing 50 to 100% increases here in the last few years. Buying gives you long-term stability and a chance to leave your mark on your home, while renting provides flexibility but risks an increase in housing costs. Something you may not have thought about when it comes to buying versus renting is the potential tax benefit. Did you know that you can claim a tax deduction on your mortgage interest and property taxes? Your loan servicer will send you a Form 1098 each year with biggest deductions in the early years of your loan, while most of the payment is going toward interest. Your property tax is also deductible for local and state tax. This only takes into account paid taxes and not those in escrow, however. I'm not an accountant, so make sure you check with your CPA, but you may even be able to deduct your private mortgage insurance and mortgage insurance premium or points you paid to your lender to get a better interest rate. Unfortunately, there aren't any tax breaks for renting a home. This one is a clear W in the buying category. Buying a home gives you the potential for tax deductions while renting just won't. You also need to think about the month-to-month cost of either option. A mortgage payment, even with interest rates higher than what they were in the previous few years, is often similar, even less than rent in the Kansas City housing market for the same type of house. I mentioned earlier that there are maintenance or repair fees that you have to be prepared for in home ownership. These can be offset by the tax deductions you receive from your mortgage interest payments and ultimately the equity you build in the home. Couple that with a lower monthly mortgage payment as compared to rent, and you're easily building more wealth in home ownership than renting. How could a monthly mortgage payment with 7% or higher interest rates possibly be lower than rent? Just like I said in point number 1, when you pay rent, you're paying your landlord's mortgage. This means even the interest rate they pay is something you're going to flip the bill for in your rent. Your rent is actually 100% interest because you're not gaining any equity. Add in the fact that they may charge enough to offset repair and maintenance costs and some cash flow, and you're well above what you'd be paying for the same home if you'd bought it yourself. However, if there is a big repair expense that happens suddenly, going back to that air conditioner scenario we talked about, it may present a short-term setback when managing your monthly budget as a homeowner. In the long run though, buying a home has a potentially lower monthly cost, whereas renting will likely be higher cost per month with a risk of monthly prices increasing at each lease term. Okay, so if you've made it this far and you're still not convinced that buying is the right option for you, let's take a look at exactly what it will cost you to wait. See, one of the biggest objections I hear in the current market is that a client is waiting for interest rates to come down. And I can totally understand that. If you're already locked into a lower rate and are looking to upgrade to a better or nicer home, higher interest rates may make your monthly budget too tight for your liking. But if you're currently renting, or you can work with your lender for an interest rate that makes sense for you, don't miss out because rates may go down a percentage in a year. You see, the prices for homes are still going up in our market. Here in Kansas City, we currently have a 1.9 month supply of housing. That means if new houses aren't put on the market, all of the housing in Kansas City would be bought up in less than 2 months. The current housing inventory is lower than the demand. Taking it all the way back to grade school economics, when demand is greater than supply, the value increases. And it is. The average home price in the greater Kansas City area is 4.6 higher over this time last year. Even if interest rates do drop some, they won't fall far enough to make up for a 4.6 increase in price. Besides the higher price, here are some other important things to consider. 1, your down payment will increase based on higher sales price. 2, the amount of equity you would have had over that year will not exist because you waited. 3, the amount of interest you'll pay at a lower percent on a higher price point will increase. You can check out the numbers for yourself in our free buyer's guide linked in the description below. Just remember, and I tell this to buyers often, you can always refinance to a lower interest rate, but unless you're Marty McFly from Back to the Future, you cannot go back in time and buy the house at today's prices. So what do you think? Are you ready to quit paying your landlord's mortgage and build equity in your own home? If so, check out the link in the description below to see what loan program you could qualify for with our in-house lender. You can also download that free buyer's guide. We included a breakdown of the true cost of waiting. My number and email are on the screen, so call or text me anytime and let us be your Kansas City real estate experts. As always, please make sure to like this video and subscribe to our channel for a new Kansas City real estate or lifestyle video every Friday. I'll see you next time.